Today we are going to talk about an unlisted stock, where if you buy a stock today, you are going to own asset worth more than four times what you paid for, even without considering the huge core business of the company. So the company I'm talking about is Indian Potash Limited, and its current market cap is 7,800 crore, but the asset it owns is around 2,900 crores. So the current unlisted market price of Indian Potash is 7.8 thousand crore. They bought a stake in Jordan-based phosphate mining company JPMC. So they got around 27.38% with a price of 650 crores, and that investment has boomed more than 50 times, and now that investment has become 26,700 crore because China decreased the export of phosphate, and because of sanctions on Russia, these two major players gone, the price of phosphate boomed, and with increase in efficiency, JPMC has become a major player in phosphate, and and their valuation has been boomed by more than 50% in just last 8 years. If we just take just this company, their valuation, whatever Indian Potash put their money, currently that asset is valued 26.77 thousand crore, and it's way more than what is the current market cap of Indian Potash. So it's like one third. If you are getting, like, you're paying one third, and you're owning the JPMC company. It has, if it has its core business, it has other investment, but with just this company, you are getting three times what you're putting the money for. So they have a cash reserve, so around 2,400 crores. They have put in mutual funds. They have put in bond. They're cash cows, and currently they are expanding their businesses, but whatever they are not expanding, they are currently put into mutual funds, bonds, and everywhere. So that is also generating money. So 2,400 crore in cash, mutual funds, and bonds they have. They also have invested in this BSC stocks, so 58,440 crores. So it will come nearly around what is it, less than 100 crores. So it doesn't matter much, but they have invested in mutual funds and bonds. So let's compare Indian Potash Limited with their listed peers, Coromandel International and Chambal Fertilizers. If you see that revenue part, all three are in same line, so around 20,000 crores of revenue. But market cap, you can see the drastic difference with Coromandel International trading around 30 times P, Chambal at 9. But if you see Indian Potash, it's currently trading around 4. Sometimes it's traded around 2, but it's 4 5, and the market cap, there is a huge difference. So one advantage here that Indian Potash Limited, that we already discussed, have here is that they have an investment that is way more than their market cap, which Chambal Fertilizer or Coromandel International does not have. That's another plus point for Indian Potash Limited, other than these P differences and market cap differences that we see. Companies fertilizer segment generate around 85 to 90% of the revenue, but it is very volatile, and it can go from 1100 crores in profit in financial year 2023 to a loss of to a loss in 2024. So it's very volatile. It's depend on lots of things, like government policies, what are the subsidies they are giving, INR depreciation, because they have to buy the raw material, and because of the INR depreciation, they have to pay more and more. And one thing that these fertilizer companies say is that the nutrition based subsidy that government used for the calculation, it's flawed. It's suppose it's take that currency exchange value for average of last 6 months, but the day they are buying, suppose it's the INR price is very low, and all those things. So there are a lot more things goes into this calculation. But again, these fertilizer companies are mentioning that this calculation is flawed, and this should be updated. And so because of all these things, and sometimes government takes time to pay the subsidy to these companies. So because of all these things, that fertilizer trading business is generating a lot of revenue. Profit wise, it's very volatile. It can, one year it's very profitable, one year it's making loss. So it's dependent on Indian government, exchange rates, what is the price of their raw materials, and they are importing it. Trade wars or in general wars can affect a lot of these things. So they are taking the money what they're generating, and they're putting into these high profitable business that is stable. So they have invested in dairy and cattle feed. They are processing a lot of dairies. They're investing regularly, investing into sugar companies that now become the second largest sugar company, and they're investing into biofuels. And they are currently they are acquiring few more sugar mills. So yeah, they are moving from a high volatile, high revenue business. They're putting taking that money and they're putting into low revenue, high profitable businesses. And so, like we discussed, we can see here that DAP and MOP import prices skyrocketed 250%. And this currency bleed. So, volatility in currency caused 280 plus crore hit in their bottom line. And these wars and sanctions are disrupting their supply chain and causing a lot of volatility here. For 2026, government has announced 41.5 thousand crore Kharif package in NBS scheme. But again, this is just 12% increment from last year, and all these things are happening. Wars and all those things are happening. Will that cover it, or again that can lead that operations into loss? Will that 12% cover it or not? That we'll need to see. So company is trying to expand their other businesses. So they already had a five existing mills in UP and Odisha. They currently leased four more in Gujarat and one in Odisha. So they're expanding their sugar businesses up because of this ethanol blending. The production of these sugars are going to be more profitable, and they're also going into business of Bio-CNG, which I think will government support to remove their dependency on LNG and all those things. So I think that they are expanding their businesses into different things where the profitability could be more than their fertilizer business. So just to give the idea of how profitable their investment in JPMC, like we discussed, in year 2025, they got 1,040 crores in dividend from JPMC. Their investment was 650 crores, and this year's dividend is way more than what they invested. JPMC generally gives around 5% dividend yield, and earlier 2022 they gave around 50 crores and keep on increasing, and now this year they are giving 1,040 crores. We'll see for 2026, but the stock prices have went up, so hopefully it will be way more than this. So for what I feel is, you make money in unlisted market where you find a valued stock which is not known by a lot of people, which a lot of people does not invest in. Because of, if you see in the last 6 months, the stocks which is most talked about in unlisted market, which is most known, they're traded at way high value that they list at 50, more than less than 50% of what they're traded in unlisted market. So if you want to make money in unlisted market, you should look for stocks that are generating money, that are consistently performing good, and are valued correctly. And if you go after some pre-IPO stocks or something like that, you will generally won't make any money and will go into loss. So this program that I see, this stock fits correctly. It's a fairly valued way, not even fairly. It's valued very less, and and it's an asset way more than what it's currently valued. The few other issues is that it's unlisted market. It won't be easy to sell, so it will be very illiquid. If some news comes up and if you want to sell, it won't be that easy. And there are no IPO plans for this. So you'll just, if you have money, have some money, just put on, forget it, cash generating cow. Once they start giving more and more dividend, hopefully you'll keep on getting the money. But again, the asset that we're getting with this is huge. So I think for me, it fits my investment thesis, and yeah, I'm currently invested in it. If you have come till here, please do click the like button and subscribe the channel to get more valued stocks analysis. I've covered videos on Kama Holding which have the similar flavor to it, but it is listed. And another stock that have the similar story, but because of some management issue, it is undervalued. That is in semiconductor is Polymatech. So you can check out both Both the videos both have the similar story like this.